There are two IPOs in the market during 7 July 21 till 9 July 21. First IPO is of Clean Science and Technology and second IPO is of GR Infra Projects. So in this video, we will quickly analyze both the IPOs and decide if it is worth applying for the IPO. We will first start with Clean Science and then we will discuss GR Infra Projects. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, we will try to cover the business of both the companies, their future growth, competitors, key risk and financials to understand the fundamentals of both companies. And then we will look at the IPO details along with the valuation to decide if it is worth applying for the IPO or not. In case you want to learn more about stock picking, you can explore my video course and join the community of 3,500 plus learners, where I also take the live doubt solving sessions. And in spite of multiple warning, some people are ending up replying to the fake comments. These people are using my profile pic and my name, but they are fake. You can easily identify the fake comments as I have a verified tick with my name and my name is always highlighted. Moreover, I never share my WhatsApp number on YouTube. So please do not fall for these traps. Also, a lot of people are requesting a video on companies that I have already covered in my stock fundamental analysis. Please have a look at my previous videos. For example, I covered Tata Elxsi when it was at the level of 2500. Likewise, I covered Polycab when it was at the level of 1000. So far, I have analyzed 34 stocks in my fundamental analysis. Alright, let's get started with the IPO analysis. Incorporated in 2003, Clean Science and Technology is a specialty and fine chemical company. Company manufactures functionally critical specialty chemicals in the area of performance chemical, pharmaceutical intermediates and FMCG chemicals. So its chemical find application in various industries including agrochemicals, cosmetics, pharma, flavors and fragrances, personal care, food packaging, etc. Its products are used as key starting material, that is raw material to manufacture the final product. Its key customers include Bayer AG, SRF Limited, Genex Laboratories Limited, Nutrade International NV and Vinati Organics Limited. Currently, company has two manufacturing facilities in Kurkumbh, Maharashtra with a combined capacity of 28,060 metric ton per annum. Company is also planning to start a third facility and in discussion for acquiring land for fourth facility. The biggest USP of this company is that it is focused on eco-friendly production and hence the name Clean Science. This leads to limited waste discharge. If you look at the future growth, chemical sector has seen a rise in demand due to usage across industries. On top of that, due to shutdown of Chinese factories, there is a surge in the demand for export as well. Also, many companies are trying to reduce dependency from China and hence India has emerged as a great alternative. Even the Indian government is focusing a lot on the manufacturing sector with initiatives like Make in India and Atmanirbhar Bharat. So all these factors would boost the growth of chemical sector in India. But within chemical, there would be more demand for green chemicals, which are the biodegradable chemicals in nature and reduce the environmental impact. Clean Science aims to expand its product portfolio by identifying products with high demand that only limited manufacturers produce within India and globally. They also intend to continue to explore high margin downstream product lines which have low competition and multiple applications. For instance, they are in the process of developing a portfolio of stabilizer products to be used as additive by manufacturers. They are similarly engaged in developing catalytic system to make intermediates for application in high growth industries including your paints and coating, adhesive and sealants that are expected to be driven by growth in the infrastructure segment. Company is also in the process of expanding its R&D infrastructure by setting up an additional R&D unit at its upcoming manufacturing facility at Kurkumbh. If you look at the competitors of Clean Science, it includes Vinati Organics, Fine Organics, Atul Limited, Camlin Fine Sciences, SRF Limited, Naveen Fluorine and PI Industries. If you look at the key risk, around 48% revenue of the company is generated from top 10 customers. So if there is any loss of business from top customer, then it will impact the profitability of the company. Next risk is fluctuation in raw material pricing. If the price of raw material increases in the future, it will impact the profitability of the company. And third risk is that around 45 to 50% revenue of the company comes from a single product called MEHQ, which is used in paints, inks, adhesive, acrylic fiber, etc. So if there is a fall in the demand for MEHQ, then it will impact the company's profitability. If you look at the revenues of the company, it has grown from rupees 242 crore in 2018 to 419 crore by 2020. By December 20, company has clocked a revenue of 378 crore. So there is a consistent increase in the revenue. Its profits have grown from 48.8 crore to 139.6 crore. Till December 20, the profit stood at 145.2 crore. Again, a consistent growth at a very good rate. If you look at the profitability, ClearScience EBITDA margin has consistently increased from 30.25% to 49.89%. This shows that company enjoys high margin. Both its ROE and ROCE are consistently high and above 20%. In fact, its latest ROE is 29.65% and ROCE is 57.57%, which is brilliant. In fact, Clean Science is among the most profitable specialty companies worldwide. Company is virtually debt-free, which is great. The IPO open date is from 7 July 21 till 9 July. IPO price band is Rs 880 to 900. Lot size is of 16 share and face value is of 1 rupee. Total issue size is of 1546 crore. This entire money is offer for sale where promoters are diluting their stake from the company. With this, promoter stake in the company would reduce from 95% to 78%. Now if you look at the valuation, at a price band of 900 rupee and December 20 earning, the company would be launching its IPO at a P ratio of 65. Now that looks slightly overvalued to me. Although the majority of companies in specialty chemical sector are trading at higher valuation due to bright future growth prospect. At current levels, the market cap of the company would be around 10,000 crore. If you look at the grey market premium, it is trading at a premium of 49%. So there are good chances of decent listing gain. Incorporated in 1995, GR Infra Projects is an integrated road engineering, procurement and construction company, that is EPC company, with experience in design and construction of various road highway projects across 15 states in India and having recently diversified its project into the railway sector. Their business operations are broadly divided into three categories. Civil construction activity, under which they provide the EPC services, development of roads, highways on a build, operate, transfer, that is BOT basis, including the under annuity and hybrid annuity model. And the third segment is manufacturing activities, under which they process bitumen, manufacture thermoplast, road marking paints, electric poles and road signage, and fabricate and galvanize metal crash barriers. They have experience in constructing state and national highways, bridges, culverts, flyovers, airport runways, tunnels and rail over bridges. By the way, this company is from my hometown Udaipur. Till now, it has successfully completed 100 plus road construction projects. The company owns 3 manufacturing facilities at Udaipur, Guwahati and Sandila and has a fabricating and galvanization unit at Ahmedabad. If you look at the listed competitors of GR Infra Project, it includes your Dilip Buildcon, PNC Infratech, Ashoka Buildcon, KNR Construction, IRB Infrastructure Developer, etc. If you look at the key risk, their business is primarily dependent on road projects in India awarded by the government authority and other entities funded by the central or state government. Any adverse change in the central or state government policy may lead to their contract being terminated, restructured or renegotiated. That can impact its business. Or in projects where they have won the bid, there can be a risk of project being delayed from government, which can also impact the business of the company. If you look at the future growth, infrastructure is one of the biggest themes in the next 5 to 10 years. Government has a strong focus on developing the infrastructure of the country with construction of roads, highways, railway network, airports, metros, bridges, etc. In fact, in Budget 2021, government has increased the budget allocation in infrastructure up to 35% as compared to FY20. Government has allocated a budget of 1.18 lakh crore to Ministry of Road Transport and Highway. In December 2017, the government launched the ambitious Bharatmala Pariyojana with an estimated investment of Rs 5.35 lakh crore to construct the highways and national corridors across the country. And already 13,000 km of road worth Rs 3.3 lakh crore have been awarded for construction. So clearly there is a huge scope for infrastructure companies. As of 31st December 2020, GR Infra Project had an order book of Rs 18,222 crore. So the future growth looks bright. If you look at the revenue growth, its revenue have grown from Rs 3,335 crore in FY18 to Rs 7,909 crore by FY21. So revenues have grown almost 2.3 times in last 3 years. Its profits have grown from Rs 412 crore in FY18 to Rs 953 crore by FY21. So profits have also grown almost 2.3 times in the last 3 years. If you look at the profitability, company's operating margin is consistently good. The latest operating margin stood at 26.97%, which is great. Its return on equity has also been consistently good. The latest ROE stood at 18.85%. So the profitability is also looking nice. If you look at the debt to equity structure, GR Infra Project has a debt to equity of 0.35, which is very comfortable. The IPO open date is from 7 July till 9 July. IPO price band is Rs 828 to 837. Lot size is of 17 share and face value is of Rs 5. And total issue size is Rs 963 crore. This entire money is offered for sale where promoters are diluting their stake from the company. With this, promoter stake in the company would reduce from 88.04% to around 75%. If you look at the valuation, at a price band of 837 rupee and December 20 earning, company is launching its IPO at a P ratio of 11.5. Now that looks very attractive. It is much lower than the competitors in the same category. At a price band of Rs 837, GR Infra Project would be valued at Rs 8,000 crore. And that will make GR Infra as one of the topmost companies in the road infra space in India. If you look at the grey market premium, it is trading at a premium of around 41%. Overall, if we conclude, Clean Science is in the business of specialty and fine chemicals with application across sectors like agrochemical, cosmetics, pharma, flavors and fragrance, personal care, food packaging, etc. Its USP is eco-friendly production of green chemicals. Whereas GR Infra Project is in the business of road engineering, procurement and construction. In specialty chemical, the government has a lot of focus on domestic manufacturing with initiatives like Atmanirbhar Bharat. Then other key trends include closure of Chinese factory and global companies looking for alternatives to China. In infrastructure, the government has a lot of focus on building the roads, highways, railways, etc. The financials of the company are looking very solid with a very good growth rate and high profitability. Although Clean Science has a very high growth rate and profitability as compared to GR Infra Projects. But when it comes to valuation, Clean Science is launching its IPO at a P ratio of 65, which is looking slightly overvalued, whereas GR Infra Project is launching an IPO at a price band of around 11.5, which is looking very attractive. I think that both the IPOs should get good response as both companies are looking fundamentally strong and both sectors have got very good future growth prospect. If you look at the grey market premium, Clean Science is currently trading at a GMP of 49%, whereas GR Infra Project is trading at a GMP of 41%. So both companies are looking good for both short-term listing gain and long-term wealth creation. It is really difficult to pick one company for investment. Although for short-term listing gain, Clean Science has higher chance of better listing gain than GR Infra Projects. But if you ask me, I am more inclined towards GR Infra for long-term holding due to very attractive valuations. So which IPO you are looking to apply for? Let me know in the comments. And in case you want to learn more about the course detail, I have shared the link in the description.